into trading hour, and let's now get a conversation going on the market and talk about how things could really shape up from here and some of the pockets that look exciting. We have Jigar Mistry joining us. He's co-founder at Buoyant Capital, and he joins us for this chat. Jigar, always great to have you on the show. Thanks for taking the time today. My first question is just a little bit broader in terms of what we're seeing globally, right? I mean, a lot of the US data is out of the way. We've heard it from the Fed chair recently as well. How do you look at the US markets right now? And do you feel like India can be decoupled from what's going on globally and that, we're set for new highs? Is that something you see happening?
Yes, good afternoon, Pavitra. Happy Diwali to you. Yes, I think, see, what's really happening in our contention is that, effectively the Federal Reserve is not really keen, in our opinion, to sort of have a scenario where, economy crashes just a year before elections. And they'll do everything in their power to, make sure that this is a softer landing in the par for course, and therefore your rates will likely stay higher for longer. Now, when this is essentially transpiring, the economies are to an extent connected through the central banking system, and to that end, if you look at the differential in interest rates, the policy rates, that's very close now. So the repo and the Fed fund target rate differential is only 100 basis points today. In that scenario, I think oil prices, flows, sort of the short-term maturities, all of it will keep playing a part. Having said that, India is sort of looking like it is decoupling to a very large extent. A huge influx of new investors post-COVID. We are seeing a reasonably decent flows, especially in the small and mid caps, right? So we put out an article yesterday where we noted that small and mid cap funds have actually been seeing a doubling of sort of inflow market share. So what was 15% has now gone up to upwards of 36%. So looks like, yeah, the party continues in India.
Okay, so that is on the Indian market. But Jigar, if we are speaking of India, I want to ask you specifically about what's going on with the broader markets. There's been so much action there. Do you feel like we've reached a space of euphoria where it's just difficult to find opportunities at these levels? Or do you think that there are still pockets where, even now it makes sense to deploy some fresh cash?
Yeah, Pavitra, so looks like we are in three kinds of markets, right? If you look at only the large caps, it looks like you are in a reasonably large bear market. Shares of many businesses have been flat for 2 years. Nifty itself is up, I think, 8 or 9% in itself. So there is one space where, the large caps and the sort of quality consumption names, as they were called, are rather flattish. And there is entirely other space, which is small and mid caps, where the index itself is up 48% since March. And if you look at the sort of free float holdings there, FIs own a very small percentage, 22-23%, and domestics own, or rather public sort of investors own 49% of free float. And they have generated a cool, I would say, 4.5 lakh crores in just the past 6 months or so. I think when sort of you are devoid of major correction in terms of memory, many of the new investors have seen only post-2020 cycles. I think they tend to forget what really transpired between 2018 and 2019, right? In that time, your profits of the entire index, so if I take BSE small cap index as a cohort, that entire index profit moved up by 40%. But, almost 250 companies fell more than 60% because there was a short-term capital gain, the long-term capital gains introduction, or there was, this SEBI reclassification for mutual funds, seemingly sort of smaller moves, but that created a huge impact. So in many of the somewhat smaller cap businesses, and there also there is a huge point to be noted, that if you look at the data, lower the free float, I think the returns have been superior. Lower the free float, the number of companies doubling in under 6 months have been higher as a proportion to the total companies in that cohort. And the smaller market caps, even within the small cap index, have done relatively better. So in the shorter term, I think flows, etc., do take control. I think when the party is on, there is little arguing on what would result it to crash. But it's worth noting that many of these businesses are now looking like they are, sort of having a large embedded value of future profits that may or may not turn up.
Okay. By the way, we really need to look at what's happening with large cap tech. Let's pull up the intraday charts on TCS, on Infosys, on Tech Mahindra. Suddenly, there's a huge move in technology stocks. It was always there. Even yesterday was a good day for tech. But just the intraday rally now, look at that chart on TCS. It's looking absolutely stunning. 3,500 on TCS and counting. And it's not only TCS. As I said, Infosys, Tech Mahindra, count in a Wipro as well, count in an LTI Mindtree. All of these stocks have run to the high point of the day. Big, big moves on many of them. Yeah, very, very interesting. Jigar, hi. Good morning. So you're saying the party is on. Now, these technology stocks seem to be suddenly participating in that party. They've joined the dance after, a lull, nothing great in the second quarter. Numbers very pedestrian. But look at the stock moves. What is your own reading and positioning on IT?
Yes, Surabhi. So, good afternoon to you also at the start of it, though. Looks like, they are looking for stuff that hasn't worked and then, get them to the dance floor, to use your terminology. It's not tech the way we see it is that it's not expensive, it's not cheap, but it's devoid of growth. So what do you do with a business like that, right? People tend to look at it from the lens of the 2020 cycle. But there, India doesn't really have tech. We have IT services, and the cash flow profile is entirely different. So looking at it from a valuation lens, which includes a 2021 recovery period, is a little bit uncanny, or rather not really the right way to look at it. The way we prefer to play this continues to remain in the sort of niche plays, R&D, ER&D plays. So that's where we continue to have positionings. The large cap tech is something that we are not totally convinced even yet that they have made the turnaround.
Okay, another pocket that we want to talk to you about is this entire PSU basket, right, which has already seen a huge run-up. I mean, the index itself is up almost 50% for the year. Do you think that there's more left in these stocks? I mean, some of them have seen outsized moves, but the news flow still seems to be very positive. Do you think we can see more?
Right. So see, if you take it as a business as a whole, then few businesses are interesting, right? So there a lot of action has happened within the financials PSU space that continues to be interesting. The defense, etc. We think there was a time when this huge order inflow resulted in an elevated stock prices. But I think we are now in that juncture where these companies are starting to account for a lot. And you might come across a time frame where orders might continue to flow in, but people might take a step back and say, let's look at how the delivery actually happens. Like 2007-8 capital goods cycles was similar, and then for 11 years the index was flatlined. Power is sort of very interesting that way. As a utilities analyst in my previous avatar, I waited for a day when power sector would make headlines. We saw it through 2012 APDRP, 2015 Uday first phase, 2019 Uday first phase. The main issue around this sector, Pavitra, is that there is a the central government is responsible for the infrastructure, right? So they can make sure that the wires go to the last mile. But whether power will flow through those wires or not is essentially a state subject. And given the disconnect within the federal structure in India, state discoms have not really been able to deliver. And therefore, you get these plays in and around. When there is election, there is suddenly a power mismatch, and you contract a lot of these short-term capacities which pull up some companies, and then you have these metering businesses going around, and therefore transformers or meters and all of that in and about makes sense. There is no structural change in that sector in our opinion.
Sure.
But yeah, you will keep having these short-term themes which you can look out for.
All right, Jigar, got that. Thank you very much. Good to have you on the show today. Appreciate you joining in and being with us. We do have to take a very quick break on that note. Back with more in just a bit.